Good morning, everyone, and welcome to the European crossover webinar. And we have seen the S&Ps further add to the gains earlier in the Asian session, actually coming up to a level I'd already had, but I was just updating some levels in early Asia. I didn't think it would get there already this quick, but you can see here, 31.12, confluencing with 31.09 to 61%. And actually, they made it up to, I think it might have been 31.13. And then we pulled back, and then we turned around, rally back up here. You can see here on the 5-minute, we came right into this range here. I caught a quick scalp, but I didn't even hang on for long because once again, I wasn't sure if we're going to try and make one more challenge. But you can see here where we dipped back, came up here to 3,100, and we're since pulling back. We're starting to see a little bit more activity here. Like you can see here, where we made it up here, I guess, let's see what the actual high was, 31.13.5. Okay, so, and remember the level was 31.12. We pulled back, not even that much. You can see here, we hung around for quite a while. Came down, 12 handles, rallied back up, and then we took a fade back in here. From there, about 20 handles, rallied back up. But you can see here, right where we tired out here, this 3,100. You can see the levels coinciding here. But had quite the run already here in the indexes. Hold on a moment. Hello? Okay, sorry about that, folks. A little bit of a little emergency. Not emergency, but surprisingly this time someone stuck. So, but I can still with the webinar. Sorry, apologies for that. But anyway, as I mentioned, we saw quite the run here. We saw quite the run here in S&Ps. And to be quite honest with you, like I said, some of us I noticed here in the chat room too. It was honestly, it was very, very frustrating, to say the least, because as I mentioned, I can't even hear what this squawks speaking. The thing that was frustrating to me was we had yesterday when we rallied, and boy did we rally. We came off from these lows. We had actually just started to trying to see in the 30-minute here. It just started to kind of peter out. The market started to tire out. I'd actually taken a short run in here, and I added, and I came back, I covered, rallied some more. I actually added again. I think my add was at, I want to say, oh no, I think it was like at 30.30 or 30.29 or something. And the market had gotten a little bit high, but it came back, and I was able to get out of that one. And I remember getting out around 30.24, and I'm thinking, okay, I was pretty happy because I got out. I thought this is probably as far as it gets. So I got out of that ad. I'm still hanging on the position of my original, and I'm thinking, okay, now we're probably going to go and roll over. Potentially, you can see right here, potentially as low as 30.10, only to go in and see this market on the news rip, and those things happen. You know, what I mean, things will come across the wires and kaboom. But this was, this is like the third time the Fed's announced, oh, we're going to do this now. From what I've gathered here, it's kind of a reaffirmation of the same program about buying bonds, and supposedly they'd be buying individual corporate bonds, but it always seems to be suspiciously come out. Once again, like I could think of, like let's say all Fed announcements are going to generally come out at 11 a.m. Eastern or something, but they all seem to always come out just in the afternoon, just when a market's about to tire out. They just happen to announce out of the blue sky. It's like as if they didn't know that they were going to make this announcement, and kaboom. So that's the thing that is really, to me, they're upsetting. I know for some people, they didn't expect this market to come back this far, so they themselves had, seen this. I even saw some notable traders that had mentioned, not that they were getting short, but they were stating, hey, look, we had already rallied this much, kind of insinuating, how much more would you expect? Probably better to get the heck out of Dodge, meaning, about those that were long. So, I mean, it just kind of came out of nowhere. Obviously, they extended, and we kept on extending, and we even went beyond, that. I remember I saw us running out up in here, and I think it was in the Asia. I think we're around, I don't know if it was 30, 70. No, it had to be right in here, because it's 7 o'clock in here, my time. So it was right in here, and I'm like, still not touching this thing. And then, of course, we spiked up, and I did some work, and we made it up here, as I mentioned. And I didn't think we would get there tonight or overnight. I thought, maybe later on, this 31.12. So anyway, really frustrating to be quite honest with you. But anyway, so let's go on and move on to the news. It's just kind of, what all had transpired. Let's go to the news here. And you can see here where the German zoo numbers are at the top of this next hour. They're expecting a 60. And then we do have Eurozone labor costs. And we do have retail sales. U.S. retail sales, that might move the needles. Just saying this whole thing with Powell's going to be speaking, and we see an industrial production, but the key will be retail sales. But once again, I think markets or traders may be hesitant to go on and step in. I myself, like I said, I shorted close to right here at this 3,100. Look how much we did back. But like I said, when I did the work here, I'm thinking, okay, this is right here, but I wasn't sure whether or not we silly try and make another run back up here. So I didn't stick around too long, but I thought, this might be it right here. But, hindsight's 2020. Let's go and take a look at the news. So the Australian New Zealand dollars rebounded sharply on Tuesday as ceaseless stimulus, ceaseless, or it appears to be, although some people say basically a rehash of what he'd already said before. So why make that statement? You see what I'm saying? But anyway, rebound on Tuesday as ceaseless stimulus from the U.S. Federal Reserve revived risk appetite, while New Zealand sold a record amount of bonds in outsized demand. The Aussie firmed, having already climbed almost 1% overnight and away from a trough of 67.70. The Kiwi was up 0.5 at 65.01. Both tracked a bounce in the U.S. stocks after the Fed said it would start purchasing corporate bonds as part of an already announced stimulus scheme and launched its Main Street lending program for smaller businesses. The RBA on Tuesday used minutes of its June policy meeting to reiterate commitment to supporting the economy for as long as necessary, when noting the downturn might not be as bad as first feared. Data on Tuesday showed payroll jobs had started to slowly recover in May after April's record slide, though that is not likely to show in the official jobs report, which is surveyed early in the month. Weekly payroll suggests we have passed the low point for employment, said Westpac economist Justin Smirk. We're cautious before reading too much into the data, but improvement due to the last 4 weeks is very promising. Australia loosened lockdown restrictions. Some other advanced nations as it succeeded in containing the spread of the virus. Major banks reported consumer spending on their payment cards and continued to improve last week as more of the service economy reopened. Now, the dollar under pressure as prospect of more stimulus stokes optimism. The dollar slipped and riskier currencies rallied on Tuesday as the U.S. Federal Reserve prepared to start its corporate bond buying scheme, while a report flagging the possibility of more fiscal stimulus helped underpin investor sentiment. The Fed had said it would start purchasing corporate debt on Tuesday as part of an already announced stimulus scheme and launched its Main Street lending program for businesses. The move boosts confidence across asset classes and underpinned the risk-sensitive currencies like the Australian and New Zealand dollars. Investor sentiment was further lifted by Bloomberg News report saying that President Donald Trump's administration is mulling a near $1 trillion infrastructure program to boost the economy, citing anonymous sources. Taken together, the news served as proof that the authorities will do what it takes to get the world's biggest economy back on track, said Emery Spitzer at Westpac. The Fed will make its corporate debt purchases in the secondary market, and so it would also be buying bonds directly from issuers in the near future. This is what really prompted things to move even further. While Morgan Stanley showed that it represented only a small percentage of U.S. corporate debt universe, it proved enough on Tuesday to support investor confidence. It just seems to reinforce the message that you shouldn't and can't fight the Fed, and everything follows from that. Said Aussie strategist Ray Trill. Still, markets have a wary eye on the Fed's Jerome Powell Senate Banking Committee testimony at 1400 GMT, given his gloomy view of the economic outlook. See, so that's what I'm saying. You get some contradicting, but the thing that goes with me is that it's only a small amount, but I guess like they're saying you can't fight the Fed, but then again, you have to take into consideration his forecasts, what has been so. Concerns about the depth of the economic damage and growing second wave of infections triggered a sell-off in riskier assets last week during Monday's Asian sessions. While the Japanese yen was a touch weaker, it has again settled into the ranges held since April. Some investors remain cautious. The Bank of Japan kept monetary stimulus steady on Tuesday as it stuck to its view that the economy will gradually recover from the coronavirus pandemic. Governor Kuroda is due to hold a news conference at 6:30 GMT. Global cases of the coronavirus reached over 8 million on Monday as infections surge in Latin America, the United States, and China grapple with fresh outbreaks. So with that, let's go to the analysis. I mean, I can tell you for myself now, I'm just only looking at things. I mean, we all have to set our stops, based on technical levels or a fixed dollar amount. But to me, I don't, you can't even trust for bigger moves. You almost have to say, okay, I'm willing to risk, 25 pips or 50 pips, or I'm willing to risk, 15 ticks or whatever the case, whatever the market's you're trading, because once again, you can't trust these markets. I mean, it's just like they're in that mode right now. But anyway, let's move on. So Europe flipped the switch with the Fed announced turning positive with bullish engulfing candle. Resistance will be 1372 with support at 1267. So here's that 1356. Remember that weekly one I've been talking about? But in case it push higher, your risk level would be 1372. And if you look at the analysis, it's going to be short. I don't mean short, but I mean, you can see there's not much. It's, not, I know some people, here we focus on the intraday levels that are usually good for 24 hours. Not saying the levels are perfect or whatever, but in today's analysis, you're basically seeing Resistance is here, support there. Resistance is here, support there. Because honestly, in some ways, it doesn't even matter, to be quite honest with you. You just have to just look at what is the risk level, and boom, that's where I'm a trade or I'm not going to trade. You can't say, well, this pattern means that look, we were just bearish yesterday, and then we had already run out of gas. It looked like we were positioned to move lower, and then all of a sudden, just like as if you turned on a light switch, it's not that fault, but I'm saying we turn around, and of course this is a bullish engulfing candle, but we turn around and flip the switch. You can't say, oh, well, with this thing, now that means blah, blah, blah. No, it's just risk levels now. So anyway, that's what you'll see is that basically I'm saying things turned around. Here's a resistance. Here's a support. And basically that's all you can go with right now, because all you can go with is just risk levels. You can't say, well, this pattern means that this after just was bearish and trying and within a half hour within a moment flipped into a different direction. So cable pullback on Friday, closing below level 2602, that weekly level. Support on Monday will be 1245 with resistance at 2680. So 1245. I don't know what the heck keeps going on here. Oh, wait a minute. Looks like it didn't even update my information. Doggone it. Well, it's supposed to be 2680. So that part's right. I don't know what it looks like. It copied part of it. I don't know because I update this thing every day. And resistance would be 2245 or 2445. I don't think that part was right, but I know the 2680 was right. Because I wouldn't have gone that low. I would have gone with the open, which is 2512. Looks like it didn't copy it. Okay, here we go. I wasn't thinking it was going to do it the same. So Aussie reversed on Monday, closed above 69 cents. Resistance will be 69.75 with support at 68.63. Kiwi rebounded on Monday, just like its cousin. Resistance on Tuesday would be 65.10 with support of 64.18. So you can see here, it almost seems like, wow, you're just saying it did this and that. But basically, that's it. That's what I'm saying is we'd come up here, and on Friday, on Thursday, we'd come down, and we kind of made one last stand here, and you're thinking, okay, this market's ready to pull back. And then, and really not as dramatic as the Aussie, but it turned around and went back up. So we're just in, like I said, all you can go by is with these levels now. I'm just saying you can't even say, well, it did this. So resistance on Tuesday will be 65.10 with support at 64.18. The dollar CAD reversed gains on Monday, closing below 36 even. Resistance on Tuesday will be 36.24 and support at 34.92. And so you see what I mean as far as I guess you'd call the descriptor. So here we are, and it looks like, okay, we get a phenomenal, bounce up in here, and it looks like, man, we're on our way, and we even push a little bit higher, and then all of a sudden, look, here comes Monday, get ready to push higher, and then lays an egg, and now we push back lower here. So all you can go by is with these levels. I mean, that's just the way it is. So you can see here, I put 34.92. What's been the low so far? Looks like 35.11. You see what I'm saying? So I'm looking at 34.92. So the dollar CAD reverse gains on Monday, closed below 36. Resistance on Tuesday will be 36.24 with support at 34.92. So you see my take, and it's really, honestly, it's not even out of what is coming. I was really frustrated because by yesterday's action. It was just like crazy. I actually had some decent gains for the day, and of course, thinking, I allowed a much wider stop than I normally would, thinking, okay, well, just in case the market jumps up, it looks like it's running out of gas. And then, of course, like I said, then that news broke, and it's really very, very frustrating to say the least. Let's go and move on now to the dollar peso. Here's another one, you see? I mean, we take this dip, then we rally all the way back up. Now we're all the way back down. I'm just saying, it's like Heckle and Jekyll markets. Thinking about cartoons, I met uh, Jekyll and Hyde. Oh my goodness! But anyway, the dollar peso reversed on Monday, just like the other major counterparts. I mean, majors, the dollar pairs. Um, Like its other major counterparts, upon the Fed announcement, support will be 21.85 with resistance at 22.50. The dollar yen stayed in a tight range despite the Fed announcement and the BOJ meeting. While the BOJ meeting is upon us, well, we did get the BOJ meeting, but you can see there was hardly any movement. But I did try to open the door in case we did get movement beyond that. So I put the resistance will be 793 with support at 674. So we'll stay with that. And 674. That's going to stay the same. Let's go with the cash dollar index. The dollar index reversed gains on Monday upon the Fed announcement. Support will be 96.23 with resistance at 96.95. So things have quelled a bit here. You can see things are gotten a bit quieter, but 96.23, 96.95. Um, let's go with the Kiwi. Let's go to the cross rates. Well, you can see how we turned around and ran all the way back up here. As risk went back on, now kind of easing back. So resistance would be, and here's how I'd be pulling it off here. Not pulling it off, but you can see a level here. But what I'd be going is I go just a little bit beyond the level when the level's already been established. Like you see, we've already broken through, gone back. Usually I'll go with the level on the way up. You can see right in here. Uh, but if they've already been tested, then I'll usually allow the market to go back beyond the level to goose some stops. So what I do is I go with this close and this open. So right there, and resistance would be 69.93. So just 10 higher for what we have. Support, things have turned around, but you have to wonder how far they turned around. So to be on the safe side, I'll go with the low here, okay, as being support. So that would be 68.51. Let's go with the euro yen. Well, you can see this thing pushed up. We did extend it further. Resistance, I always want to go with the high and the low. You see, so you get some confluence. So look at this close. You see this close here with the open, and then you got this low and you got this high. So I'll just go right there in the middle, which is that close and open, and just about tags this high. So let's go right there, 22.32. support, I'll have to go back to this level because you see how it's above here. At least for the short period, it's going to be right here, 2095. Go to the euro on. A little bit of a mixed bag in here. We're just going to go with the level. Keep it simple in this situation. See right here? And now I'll tell you what, we'll go with this high. I don't think it's going to take off. Yeah, let's just go with this level here because the 9 saw a good confluence here. And I'd have to make a pretty good push to get up here, and I think that you probably may not make it all the way back up here. So let's go with this level. What you see right there? 64.47. Support. We know it's solid here. Solid as a rock. We're going to go off of this low here, thinking that we wouldn't make it that down there. And that's actually below the day's low, which would be 62.37. Okay, the Euro QE. Remember I told you how they would go back to its established level, they go back to revisit it. So that would be this level here. So I would look for to potentially overshoot it a little bit. So you see this low here, we're going to go with that. And that's going to be the resistance, which would be 76.25. Oh my goodness. Support, I'm going to go with this open here, and it's actually just below the low right there. Just a hair below that low too. 74.31. The next thing is the Aussie yen. Well, this one kind of pushed on both sides, and of course you had the trickiness with the yen, but it actually with Bank of Japan, but it's actually stayed, at least dollar yen stayed within that range. So I think this is as good as it gets here. So and also confluence is here with this close here, this open, this low, this close here. So I like that right there, which is actually just a hair under what it actually established with the high. So let's call it 74.98. Uh, that's going to be support, although, yeah, let's just go here. I don't know if it, I don't think it'll make it down here, but at least you know where your risk would be, which would be this open here, which is 73.37. Let's go with the guppy. 36.39. And just a touch above it, which would be that low here, which would be 36.43. And the low, right there, 34.91. A little bit of, quite a bit of a range, but that would be the risk, 34.91. And if you look at Sterling on, just going right here with this open here, just above that key level, 81.22. With the high coming up at the highs of these bars right there, which would be 83.27. I don't think I'll make it up there though. There we go. We'll go back to the other screen. I'm looking at the SPOOs, as I told you. You can see that this is your area right here, this 31.12. They made it up to 31.13 and a half, and they did. There's no way I would have thought. I thought maybe they may have made it today was Powell's testimony, but you can see here we made it up there, and if you look on a 5-minute chart, you can see here we kind of hung around. I showed this earlier. If you look here on the NAS, on the 2-hour chart here, good run up here. If you look at it in the June, but clearly you can see we did shift to buy modes in these markets. Look at that. And you can see here where the market tired out. It looked like it was going to get ready to roll over. And all of a sudden, an announcement comes and trips everything up. And boy, we had already rallied 100 handles off the low at this point. That's why I felt confident, had widened my stop out. Like, well, look, we already rallied 100 handles. And we were really overstretched. I remember someone was mentioning, I think, I was talking about the tick or something was, on the NYSE. It was really stretched, blah, blah, blah. So we'd already gone so far, and it was just about really, like I said, I just covered an ad. And I think the low was like 23 and a quarter or something like that. And I covered it like at 24 and a half. And 24 and a quarter, I don't remember what it was. I felt pretty good that I'd covered it. I said, okay, now it's going to rally up. And then we can roll back over. And then also we got this stupid thing here. It was really frustrating. But we did reach this level in here. Like I said, it's hard to tell here on the 30-minute. There isn't really anything that would suggest, that the market's run out of gas up in here. But when you look at it on the 2-hour, then you can see, yeah, there was a level for that to go to. The market kind of ran out of gas, so we took this dip. But with Powell speaking, there's a chance that we could maybe make another run back up here, maybe take that out, maybe then we run out of gas. But best to wait till the testimony, see what he comes up with. But it could be a little bit of a mixed bag because he is very concerned. You can't have it both ways. We're going to buy this, we're going to buy that because the economy's so bad. So then you wonder, well, how much more? So I don't know. But like I said, you have to just go, I think, just as I was showing you, just go with the technicals. I mean, okay, I'm willing to risk this and that's it. You see, I mean, that's how we should do it. But I'm saying is who would have thought, as the saying goes, who would have thunk it? We go even beyond this area. Look at this 30.63. The market initially ran out of gas right there at 30.63, and we even did back, but we turned around, reversed, and came right back. So I think you have to take these levels into consideration, and that's where you have to look at it. Whether if it's FX or it's the SPOOs or gold. Gold's kind of danced around up in here. But that's what we have. Thanks for joining us here at the European Crossover webinar, and we'll see you in the chat room.